I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA Review. Today is March 11, Wednesday, 2026. Hope you had a good day today. So kind of going sideways in CPI. We talked about a couple ideas on the 9th, a couple days ago on Monday, and talked about either, pushing up here, after this video was done, then retracing back for being bearish for new lows, or obviously, going up in that case where you'd see, higher highs and higher lows, right? So far it's pretty neutral in both ideas. Since these videos, we've came up here and we've only took out that guy and we stopped, and we've consolidated, kind of like this, and then are we going to pull back or not? So it's still kind of, both ideas are still in the picture here. This also, when I drew this, you can obviously understand that it can go up a little bit higher and then sell off and do the same type of idea, right? So very hard to do, projections days in advance, let alone day before with no, Asia and London data, right? But keeping it simple is this is not a simple market. Obviously, we got that V shape for the seasonality. I've been discussing that too. But now we're in it's the 11th, so it's the following days here, and it can get really choppy here as far as rating up and then coming back down and then coming back down, and then the 20th comes in, and the last 10 days of the March, and then we push back up. That's the general seasonality. And again, if you had it, it would make more sense to you. But keeping this pretty simple, you got liquidity here, and then you got liquidity here, and imbalance. So which one is it going to take? That's kind of like we're pretty much stuck. I expected, a little bit more push down, or a higher even. We're going to take the previous day's fucking higher low, and sure enough, they pulled the rug with that right there. But with it being choppy and being a little bit hard to figure out where price is going to trend more longer term or near term, longer term, right? You still could find a trade inside the up and down, right? Of the consolidation, so to speak. This is kind of like what it's doing at the point. It's kind of like this kind of shit right here, where kind of like, I'm sorry, over here. Remember this over here? Where, consolidated, it was going to go up, it was going to go down, and it stopped here, and then ended up breaking through here, right? So that's kind of like what we're doing. But look at the sauce. The sauce is there if you allow it to set up and marinate. The sauce is better when it marinates first. So you get the CPI high here. Before we even get that, you see the consolidation, you see the speakering, you see the so Asia didn't take out any higher low, and the midnight level is literally that level. So it looks like we're going to raid that first. So it's like, if then what? After, and then what's the second step? Down here taking liquidity, and then coming up to take liquidity, then coming back down to take liquidity. Here you got those, nice, smooth. I talked about it yesterday in the video as well. Sorry, it's 50 minutes, but I did say in that video that they're building liquidity on the lows and the highs prior to CPI, so it can, A, confuse in which ways it can attack, and B, so it can attack. And then with that logic here is how we're getting almost to both sides of the market, right? So for example, now that I laid that out, there's the Asia high is sitting there, 930 is sitting here, right? So the Asia high here, and then we had already came down and took out the Asia low, and then we have these guys right here. If you take a look at these guys right here, so you can see that this low here that was made at 6 o'clock, so pre-New York right here, you can see that we didn't take those out. Okay, pretty much a -1 standard deviation there. Let me do it on the 1 minute, so it's a little more. You can see it here. So look at this. This doesn't take out that low. So you have a good idea that we're going to come and attack this. That's just the lay of the canvas initially, right? So now that I've mentioned that low and the Asia high, the price of 930 is sitting in between. Forget even CPI. Okay, now that we've laid that out, then we're going to go look and see which way are we going. Okay, well, or what the possibilities are, right? Man, I can't even fit all this on a screen anymore. So, back to the 1 minute, you'll see CPI opens up here. Now we have the first imbalance from Friday. Okay, so Friday. I'm sorry, Tuesday. All right. Another thing I forgot to mention yesterday before I even continue is that you also want to look at the opening range gaps from days ago. Usually, generally 5, just like the new day opening gaps. When you see these red, open gaps for the at 6 p.m. Eastern time for New York, you'll see that I use 5 previous days of those. The imbalances. I use the opening range gaps. I use obviously the old week gaps and blah blah blah, right? So gap theory, but you want to lay that and see how that is being used in support. In yesterday's video, we were pretty much sitting on the upper quadrant of Friday. So yesterday was Tuesday, right? And if yesterday was Tuesday, which was right here, the opening range gap, I'm squeezing it out on purpose. If you look to the left, well, we have Fridays here, so we're gauging the 50% upper quadrant, lower quadrant, where price is using it as support or resistance. So for example, if I go to Friday, which I'm hovering in this video now, right? You see that we came down, we came up to the 50% of that opening range gap. Then we sold off. And then Sunday, gap down. Then we made Monday's opening range gap right here. Notice how we went right through it, above it, and then came up back into it, but in the upper quadrant, and bought. Then we push up. When we're pushing up here, we're going now into this opening range gap. Yes, there's liquidity and balances and all this other shit, but algorithm is referencing these levels, right? So what do? We shoot straight through the whole fucking thing, obviously here, right? So when we did that, we came back. Watch this. You can see the 50 on the. You can see the 50 on right here. See the 50 right here? Look to the right. Look to the right, right here. So the price is now using that as support. It's not perfect, but it's using it, right? Then this level bounces on it too. Then we come back up, we come back in. So we're making the drives up here. And then now we're in the, if you were to do an eighth in this, I'm not even going to do it, but look to the right, look to the right. You see that? See that? See the eighth level in this quadrant that I'm showing on Friday? Well, this is bouncing on it. Then this is popping up again. Popping up here, drive, retracing back into, well, we're also using that, which is Tuesday's opening range gap. But look to the left here, you'll see that the top quadrant 25, look to the right. Oh, we have a gap that's sitting there, the all week gap that's also there. Not a coincidence, but that is sitting there. And then you also have that there's a first imbalance right there, which is so funny. I'm not even going to go into that, man. But and you got that day gap, but you're using these. You're also still using that levels, and then again, you're not literally married to it. You're using it for an analysis. Using it yesterday was better than using it today. But go do the back testing. You learn something maybe new. If you're new, I don't know. But anyways, that being said, now I can start the video, and I just spent 8 minutes doing that. Okay, so you see that 8:30. Well, I have to zoom this back. God, no space here. Okay, so again, that low that did not take out that low. I mean, we're talking like that's super equal, bro. Like 3 times. So you have the high here in Asia. We have news today, which is CPI. So that's going to make sense that we're eventually going to grab Asia's high, right, to clear the day. Now, look at yesterday, Tuesday, previous day's high, previous day's low. Which one do you see it going more towards or attacking to be on the side of direction? Out of all the days, with all this bullshit going on, you mean to tell me they're going to keep this little small range into yesterday's small range? You bitches. I mean, like the probability, and I'm not saying it because I lost right there. I'm just saying that the point is that it's so rare for you to see this. It's super fucking rare, right? And obviously with the climate that we're in, right? But usually it'll take one of the highs or lows of the previous day. So right now we're sitting in the middle. So this is either gonna slither up or slither retrace down. And there's literally nothing you can say. I'm sorry if that sounds stupid, but it literally is. That's the case. So, let me get back into the video. But how could you have been a participant even in this shit situation? Right? Well, now, Asia high, that low. Okay. This sweeps first. Big stupid gap on that. That's the data how we're not gonna leave that alone. They're really trying to push the idea of every direction, right? Selling the idea that it's selling here. So pops up. Usually CPI will shoot down and then pop up. And it happened up first, which was really suspect in general. If you know, you know. But when the CPI just came to sweep this guy and this guy by a hair. That's it. Right? Just a hair. Okay? And then immediately came back and closed that way. So what did they do? They rated there. It's a speaker. So it's a high, then it makes a low, then it makes a newer high, then it makes a new low. I don't have to draw it. You're like, no, I see it, bro. Okay. Okay. Just saying. Okay. You see, right? We even made another low after this low. Right? So there you go. So and then mean reversion here. That's a mean reversion here. It's too much to talk about. Point is, once we attack that upper side, we come down to take out the low here, right? And do not take out that low. So this is now another higher low. Now, the sell model and the buy models, they always start with an inversion. Always start with an inversion. Go do the back testing, right? So we have an inversion here, right? All right, and then we come up. You don't know what it's doing. It might buy still. And then right here, doesn't follow through, and then it pops up. Look at this 9 o'clock candle. It's the 9 o'clock candle, literally. All right, pops above. That's a buy, right? So they're gonna leave this. Okay, cool. I'm still not even involved. I didn't trade until 9:30 open anyway. So I don't need to fuck around with the hoopla before 9:30, to be honest. So, but and you want to let them use this data pre 9:30, post 8:30 for us attacking our trades and models. In a general, just to make this video very short, this was a pump and then dump. Okay, pretty much, right? So pump and then dump. For it to come down here, it's gonna have to pump first and fake it, right? And that's what they did at 9:30. So okay, 8:30 takes it to the left. All right, then and then doesn't take this low. Starts to pop up, obviously buying. Okay, shoots up, drive one. Okay, when this makes this high, it does not take out this high, which is the Asia high. All right, so that right there tells you that it's going to go up another drive. All right, so you're sitting back, you're watching it, get the drives up, retraces back where into pretty much you could do the math, do the whole projection on this wick right here. It's a gap, so the bodies are pretty much kind of by it. It's also not. It's also retracing back into obviously the breakout area of 9:30, but it's also not taking out that low. So we're coming back into this little order block here, this little demand block candle. See that? Boom. See that? See how it's the only candle there, right? And then everything else is bullish. That's not a coincidence, right? So it's kind of like I'm just gonna put it on the down candle. It's fine. But obviously, you could put it here too. It doesn't matter. But notice how it doesn't take out the low of that lowest candle's wick. All right, so there's obviously an imbalance here. I could do so many more drawings. This video will be very long if I explain it all. So, but just understand that if X marks the spot as far as the leg here from here to here, the range coming back in. It didn't come to a 50. It didn't come to this first imbalance of Tuesday. So it whatever. It didn't have to. But it's playing out. You're letting the first 30 minutes open up, right? And then it's just a high and a higher low. Then we get the final push up. Before we do, we get this. I got this imbalance here highlighted, and then we pretty much get it. We reuse it. We reclaim it, and then I could have put a 5 minute here would have been better. if I put this on the 5 minute, but I'm just going to pretty much delete it for now because it's annoying. But here's the opening range gap in. It's a small gap, and that's the other thing I forgot to mention yesterday. We also have a small opening range gap yesterday. So when you're having these small opening range gaps, you're going to have an indecisive, smaller ranger day, most likely only because of the fact that we're going to go up above it and down it and all that. So you're not really working with, you can see both sides of the market is pretty much what I'm saying. I can see the highs, I can see the lows. So, the odds are 50-50, right? But in this case, we're going to go below that opening range gap and the 930, so to speak, and then into what I mentioned. And then you can see there's a bearish imbalance right there. It's highlighted right there. See the box? Okay, you can see it. So there's a little imbalance right there. We close right through it. We come up. We shouldn't be this high. And you're going to say, oh, that's a lower high and a lower. Yeah. The problem is that, remember, here's the midnight level, by the way, in that green blue. And then the Asia high right there. That's why it's boxed. See that? So we didn't hit that, right? And the odds of it keep going down without taking that are slim. But on the same speaking, was there a sell from here to here? Yeah, I mean, you could have took it, but then you better take profit. But that first imbalance of today was going to be the 943 in the green here. And you can see that we create that imbalance and then we dip right into it, the highest set. But A, this is a little premature. B, you're going to have to take the profit. And C, I don't, that's what it is. It is what it is. And then, if you let it come against you, took a loss. So, or if you bought this, I don't know which person you were or what someone is. All types of different people, right? But when it came down here, it popped up. You generally don't want to see it this hot anyway. Let's keep it like that to keep it 100 like that. Again, it's a little too early, right? And then now the macro kicks in. But you can see that that bearish imbalance. I said that we also have a bullish one. I didn't draw it. It's a blue one here on this 952 candle. Just imagine I drew a blue imbalance right here, and that would be pretty much holding this price. So when it came down here, you can see that it's being stuck in this bearish imbalance right there. Notice the body stopping, and then the body stopping here. It's like, okay, right? And what does it do? It starts to go up. So this was a higher low, and then it starts to push up. It's immediately buying. If it's selling, it shouldn't be doing this. So they're going for a new raid, a new high, and then you should be waiting for a raid anyway. If you think this was a raid here just for this, it's a little too easy. And then they're getting more confused the market. They're getting more buyers in here, and then they push up, right? You're sitting in the center of this chaos. So that's to explain sort of this situation. Someone thinks this is the mean reversion here of it, up and down, up and down. But anyways, let's continue. So then we get a push up. Now the sell model continues or initiates. We started here with the sell model here, right? Little consolidation. We push above. That's an accumulation right here. One, or your low risk sell. I'm sorry, low risk buy. This could be your low risk buy here as well. But we'll just say that this is your first accumulation here. We push up, and retraces back for a second accumulation. And then you can even say this little part right here is a second accumulation here. But generally, this is your first accumulation on the sell side of the curve. Then you get your two distributions on the right side of the curve. So you'll see that when we pop up, it's going to start with an inversion imbalance. If it's bearish, it's going to be a bullish inversion. So that's why here, even when I showed you, when I had this highlighted with the imbalance, it would have to already been respecting more of that being a bearish imbalance here to invert to then come back down, right? It's just that would just be too fucking easy to just roll right through initially. But look where that bullish balance is. It's right here. It's not up here. It didn't create a high like this with a displacement. See, just like this. Just see how this pushed down with a displacement and came below. You're going to say this too. Yeah, but this didn't take, this is the same story. This didn't take out that low. So you're not going to look at this. I mean, I'm not buying equal lows or equal highs, generally speaking, right? But That's the logic what I'm saying here. Over here, when it pushed up, this, yeah, it pushed up and it made an imbalance, but look at all these fucking drives. It's not like it came underneath quickly and started doing this. No, it kept going first up, plus didn't take liquidity. Okay. What's the difference with this one here? Very clear. This pops up straight up, right? And then this candle closes, this 10:01. It's the 4-hour candle kicking in also, by the way. So that is the other gist of this conversation. And then because we've laid out the understanding that, well, we've pushed up now. Now, if you're married for it to keep going, well, it's not likely. It's just not likely. And if it did, we needed to see more follow through, and it's not doing that. So you have a very high chance of this selling back off. And you can do the intermediate high left and right of a long-term high and all that. We can get into that, but there's no way. 20 minutes. Okay, so you can see with that understanding here that with those lows not being taken, that okay, now we're gonna make our way onto the other side of this. Okay, so we push up here and we get a strong candle. All right, and then and also, by the way, if you look at this price action and how do we know? Well, generally you'll see this next candle just push straight the hell up, and then it'll birdie up if it's really like taking off bullish. Okay, so you're not getting that. Okay, you're not getting that. You're getting this solid candle closure back. Okay, fine. Okay, then what does it do? It retraces back here into that first imbalance, this one. All right, and then so it's sitting there, and it's like, okay, tags that. Now you have to mark your chart, because if you mark your chart, you're going to see price better. If you try to guess it, it's not good. You need to mark your chart, period. And if you did, you'll see that, okay, well, we went right through the fucking imbalance. This candle, this 10:03, went right through it and then popped back up. That's not bullish. That's not really a bullish scenario. You're going to say, oh, it's retracing back for higher, for some drives to push back up. I understand if you saw that too. And could it have done that? Yeah, it would have been a big upset for normal people who are selling here, generally speaking. But because remember, we have the structure to the left. We have this high, we have that low, we have that retracement high, we have the expansion down for new lower low. Then we pop back up. We're slowly driving easy. We didn't take this high out. So technically it's still bearish here, right? So you got to make sure you follow that. That's the structure is really there. So that would make this a lower high. Even though it took out that high, it's still a lower high from here. Okay, cool. Now that we've said all that, the price here, basically this high, when it's going to reach, if it's going to reverse, you're going to either see a reversal, which you do see it on the 15-minute time frame. Look at the 15-minute right there. See how it ends up with a doji candle, a fucking like a pin bar. The 15-minute. I said this on what? I said this on what day did I say this? I can't remember. Didn't I say this recently? Anyways, or was it back more? That was a sucker one there. But you had chances of going up. Anyways, I don't know what the fuck I'm talking about. Forget it. Point is that that's it's underneath the midnight level as well. So what they're doing is sweeping above it just to get the better entry for sells. If it's a sell day, above the open or the midnight level is going to be the best sells for bearish, and then opposite for bullish, right? So that's what that's doing. So anyways, this price pushes down here, gets to that first imbalance, pushes back up here. That high makes a low and then makes a lower high. So you're going to get a failed high on the right side, and that's your best entry here. This is how I get in for the first trade. Take a sell down to where? Take out the liquidity, and you have bust out levels here. You have the 830 level here. We're going to also come back to that first imbalance of Tuesday. Monday is all the way down here. So we'll talk about that later when we get closer, if we do. But you can see that I'm measuring this last up candle, very similar to, I think that was yesterday's video. I didn't use this entire, not for today. If we end up being lower, I'll go revisit this. But for now and for the intraday, I'm looking for just the candle itself. And I'm using the wicks as well, not just the bodies. Anyways, you'll see that it's 1 and 1.5 down here, and then 2 to 2.5 down here, 3.5 to 4 is down here. Okay, cool. This, if it's going to be a sell model, we're going to want to see a low risk sell and starting with a inversion. It will always start with an inversion. So right there, you know what kind of model you might be in, sell or buy, if you see these characteristics in price action, right? If you're new, okay? So this, when we're blowing through it, it's not really bullish. Comes up, you thought it was buying. No, it's just making the lower high here. And it's really tagging this above this candle, because once this made a new low with this candle, it just tagged it, whatever, not a big deal. But if you do a fib on it, you'll see that this is probably a 79. This is how I used my, let me just move it out. Can you see this? Okay, cool. 70, I'm sorry, almost under a 70. So almost under a 70. Here's 61. So as soon as it gets into the 61, I'm pushing sell pretty much, right? Stop loss is above this 79 initially, 50% of the candle up here, and then I don't want it to be going any higher. You generally speaking should put it above this high, but you know, that's in extreme cases. Then what do? Well, it's coming outside that range. You see the little fib that I just drew, right? So that's basically like a fib entry. Okay, in a sense, I'm only waiting for that type of flow. What the fuck? So I'm waiting for that type of flow. Then what does it do? Then you get this 10.06. So I'm expecting a 4-hour candle to reverse, obviously. The 10 o'clock play, right? 4-hour candle. Then you get a closure with this 10.06 right there. And before I even say that it closed out, when this candle wicks all the way down past the open of this candle that I'm projecting this order block. I'm projecting this last up candle, this supply wick. You see the supply candle. You see that it comes outside of it. It triggers a sell program as well. It triggers the sell program, because if it was bullish, it should have came in and bought at 50% and started birding, like I said earlier. That's a signal of saying we're coming back down. Okay, cool. Now that we've said that, wicks outside the open of that last up candle, comes back in. That's a signal. So it comes back in and retraces in. Now you're buying it inside that upper candle, right? If I was to quad this upper candle, you'll see that it'll be almost a top 25%, probably in between the 50 and the 25, obviously. Anyways, that's just all extra tidbits. You're inside this old weak gap. And then if you even quad that, you'll see that it's fucking, the bodies is sitting right at 25%. I'm not even going to draw it. I don't need to draw that, but you'll be like, damn, man, that's a lot of shit. Well, I don't know what else to say. It is what it is. I'm saying I'm overkilling it. Okay. But okay. Well, what really mattered? This right here. Once it closed here, now there's no bodies anymore. Look at the bodies. Look, we're just wicking underneath. And you see underneath that gap, plus the 25%. Look at the opening. Look at that bullish imbalance. It is the 50%, the same level as the fucking midnight level. Do you think that's a coincidence? No. So as you see, wicks above it, wicks above, wicks above. These are all entries. All of these are entries. Even from the top, entries, all entries, right? No bodies anymore. You can see I'm highlighting the up candle with this line right here, showing you that it's that up candle. Very specific what I'm being here. And then now the bodies are stuck there. Now that first imbalance, we went above it. We used it as support there. We sold from it. We came above it and bought. Bink. See that right there? See that right there? Boom. Straight up. Then we tested it, came back down. Now we're underneath it. Right there. Watch it sell off right. Boom. Look. The body's left here for sure. Okay. And yeah, you're in between this gap, and there's so much other shit I could say right now. But I mean, anyways, slithering down here. Boom. Right here. 10:21. It has left the first imbalance. We had bodies inside it, inside it, inside it, inside it, and gone, right? If it's spying, it should never do this. It should never come down here and close. Never. Number one. Number two, you also have it fanning. See this? See this little fan right here? It's fanning out. That's a bearish signature as well, right? Shouldn't be here. Should be all the way up there. If it's going, should be already structured up. Okay. So then melts off right there. You literally can push sell right here while you see this leaving that first imbalance and then closing. All right. Control the price. See these up candles here? See these two up here? This one, this 1014. See that? We don't break that high. Got a swing here. All right. And then the lower low, lower high structure. You do a low to fib retracement right there. You could put a low to a fib retracement right there. Let me fucking draw it. There's no way for me to make short videos. I explain way too much. Lower low, lower high. Lower low, lower high. So it's failing. This is very common. You're not making higher lows here, right? And then I'm not even gonna. This is an inducement candle. Then they make this low and this lower high. I'll draw the structure out first. Oh boy. And it's like, okay, now what are we fucking doing? All right. So you see this? You see this here? So while the structure is there, in this first leg, you got sell 1, 2, 3, 4, retrace 5. I didn't draw that because I don't want to confuse it. This made the lower low. It went through and it came into the 101.5 and it took out that higher low. That's a high, that's a higher low, that's a higher high. Isn't that a break? Now, we know this is breaking before it, but isn't that a break? In general speaking. So it came to the 101.5, okay? Tag pretty much this guy to the tick. That's not fucking random, people. And then misses the top of the gap on purpose. 101, look at the 1.5. Oh boy. Beautiful, right? Gets into there. What does it do? It retraces. So they make a couple drives. Once they break this low, they make a couple drives down and they put liquidity in here. And it tagged into here. You're going to say, oh, well, yesterday, yeah, but we expect still lower pricing. Number one. Number two, we're not at an equal lows down here. Number three, we haven't hit that yet. So that being said, and it popped in. That's fine. And then it made its low. This is that low. Then it pops up. Yeah, this is a shift of structure here, but it's just to keep going a little bit more, right? Retraces back where? For the lower high, the real lower high. So forget all that in between shit. Just look at this high to this low to this high. And I see this before it even before it paints. I picture this type of thing, okay? The structure of it, the retracement. If I do a fib from here, oh, you can see it. Not if I do. It's there. Fucking 50% is right here. Right? So I'm not going to be looking for another sell unless it comes back up here. So if I take the sells from here to here and it comes down and wipes out the liquidity, I'm on an oversold. I understand it's going to retrace back. I have two options. I can take the profit, let it retrace back up, or buy up, which is a counter trend if you're really in sync. And then buy up for a counter trend and then make a lower high and then sell off again, get back in with a full boat, or you partialed and re-entered, however you did it. But understand that you're going to go back into this range, and I'm only looking for that sell to be in the top 50% in a premium level to get a better price of selling. Where's that? It's right here. You see this right here? You can say, oh, well, this is a breakout area. Yeah, okay, well, we're going to still attack that. So they pop up once. So I don't usually count the first time. This is drive one. If it's really early, then I do. This is drive one, retraces. Drive two, retraces. We just tagged that up candle. And then drive three, boom. Where does it go? Where does it go? It goes right into the first imbalance of today, which was at 943. Look to the right. The body stops right there. All right, and then it tags it. Perfect. It did all this beautiful raid break retrace. I mean, it's an CPI is easy when it comes to these type of things. This was just definitely a little bit more difficult. Slash, you had to understood the liquidity map, and then you also experience, and then whatever. But I expected a much bigger range than this today. But this is how you could have been a part. You could have been a part of buying if the trending up. You could have been a part of the fucking move that pushes up with a new high and a higher low and a new high. Then say, okay, well, it makes a low. I could sell for a lower low and a lower high and a lower low. So this is really telling you I'm selling. Even popping up here, I'm waiting for it to fucking get there to sell. You get the drives up, 1, 2, 3, sells off, breaks structure again, like we just broke above this swing and to go up. Now we got here. It's very short though. All right, and then to get from there to down here, you're initially going to get a break first. So you can get these two down candles. Boom, pushes, breaks, internal, retraces for lower high. See this lower high right here with that high is the same idea as this. What I just said right here. The same exact fucking story. No difference. Period. All right? And why? Because now there is a higher high, there is a lower high, and there's a lower high to the left. That's your swing. Over here, I got my second drive up. This is that lower high. That's a higher high, and that's a lower high, right? So long-term high, a short-term high to the left, short-term high to the right, right? See that? That makes that lower high. So you're waiting. You can wait for all of this, or if you're confident, you know that by the time it doesn't make another high, it's a lower high to the right of it. That's the same idea. This is how I got into this cell here. All right. So same logic. And then what do? Well, we retrace back into what I just mentioned, tag the fucking first imbalance perfectly, and then we come below, up and down. Notice that we're up and down that 930. We're bouncing around that level. You can see that with your eyes, right? Whoa. And then this is Tuesday's first imbalance, and then we're coming back for the next drive. So you get 1 retrace, 2 retrace, 3 drives, right? So 1 retrace takes out the internal, second retrace, and then third is the finale. So on the sell model is complete once it takes out, doesn't have to, but takes out the liquidity that we're talking about. And that's why am I got my circle here? My target is literally this level. Why? We have the 1 on 1.5 here. We came in right back to the breakout area, which is what? That candle. I'm using the candle as the breakout area. I'm measuring that candle. Notice that. Notice I'm measuring that candle. Look where the low is. It's a tick away or two up from here. Literally ticks away. See? So we came in, we sold off, came to the 2.5, hit our target, sold back up above the 1 on 1.5. Try to get closer back to that 930. This swing here. Now from this range, from this high to this low, it's going to retrace back to 0.75%, just like we discussed this sell here and that fucking sell there. Same idea, fractally, right? If that's a word. And then, look at the body stopping right here on this leg down. We have an imbalance here. We first tag it first. They try to induce you, but this is how they did it. They don't know. They don't let you know that there's a first imbalance from Tuesday there as well. But notice that's there, tags it, and then comes back. Look at I'm not drawing the bearish imbalance. I'm using that first imbalance. I'm using both, but I'm showing you only the first imbalance here from Tuesday. Look what it does. The body stop here, stretches a little bit, just try to get some of this more of the breakout guys right here, and that was it. They couldn't get any higher because they don't want it to keep going any higher for this guy who's buying here, general speaking, right? So they induced the leg, all right, and then drive, okay, and then now you're getting a short-term low on the left. You get the lower low, and you get a short-term low on the right as a higher low. Right? So another swing there, and then it stalls lunch is kicking in. Everybody's been getting money from lunch the whole day, and then now lunch is going to retrace back slowly to wipe out liquidity to the left. Why? Because this was easy selling. You know it's fucking selling over here. Are you still buying up here? No. That structure has that boat has already sailed as far as buying goes. Because why? Well, this was a lower high. Look at it, right? I'm sure you understand, right? Right. So back to the conversation of this whole story. Where could you, with no bias, work? I mean, you had to have. I mean, we had to have some type of bias, which is the structure and watching the flow and coming back to these lows. That's fine. But where do you see the best trades? Where's your model? Where do you see this panning out? Where does your eye go to directly? Right? What do you see? Right? So that we all see things differently as well, obviously. But at the same time, it's still there. The logic is still there. Yes, I could have drawn a bullish imbalance right here, and then bodies would hold that too. I'm not drawing that. I'm using this. All right, that's an extra side note. We tag in these up candles. I could have put it there, but it didn't reach, and they did that a little bit on purpose. But that's fine. I just did it right there for that first one. No big deal. Anyways, and then what was I gonna say, dude? Got into the 2.5, and why this circle right there? Notice how it fucking reverses right there. Why, baby? Because of the fact that I got this low highlighted. All right, this low. Look at the 25%. Notice how they missed that top quadrant of the gap. Very close though. All right, but look at the low here. What's the low here? Low is 892.25. Look to the right. That's where my circle is. Right? Because I knew we were going to hit that 892.25. Because you're not going to just hit that low and not hit the 892. But anything lower than that, look how we tag it, and we don't take this guy out. Notice how they didn't do that. Okay. So that is the understanding. Okay, well, I didn't know what was going to happen today. I don't have a bias, but the trade that I saw was this. So on the right side of the curve, low risk sell here. You could say accumulation 1 for this sell. All right, for the distribution, accumulation 2, boom. And then it doesn't take this out. And then you could say this is even number 3, pushing down for the raid. Boom, you took out the liquidity. Now it's coming back up, right? So and there's a buy model here. You can see this model here. You have an inversion here. We close above it. We come back. Kind of sloppy though. We have one right here as well, and we start coming up for drives, and then we make a new low. See how it rushes? When it retraces back, look at this whole range. It's taking up most of the range's liquidity. Okay, cool. Breakout guy right there. See how they miss it by a tick? Look to the right. Oh, on purpose. Perfect. Comes above, plays around, and then the PM session kicks in, and then it sells off right there after 6 minutes. All right, so then look how the bodies are getting held right there. By the way, that is the opening gap. This little faint red line. This is the day opening gap. Right there, that level. We're also using that. Midnight level's up here though. And then when you're below both of them, you're obviously selling. So in this case, that's that level right there. Can you see it? Look at the bodies are also see this first imbalance. See it? You see in the background? Okay, so that first imbalance from Tuesday, the high of it is the same level as today's opening gap. They did that on purpose. So when we closed yesterday, we opened literally. They referenced back. They consolidate around that level. You get it? All right, bodies sitting right there. Immediately shot down for another structured low. I am doing way overkill, my dude. 43 minutes. I haven't said nothing else. Going sideways on the VIX, very common here. So you can go do the research on that of the up and downs. But there's that. Dollar is going up, so it's leaning us for the sell model and going down. And then we have obviously in a shakeout day initially. So 830 pushes up. It's a higher high for Nas. We have lower highs with S&P and Dow, right? And what does it do? It sells off. So watch the flow. Sells off. Once we sell off, we have a higher low here in Nas, and we have lower lows here. That's the buy. So this was why this was a great buy, and it's pushing up, and then 930 ends up pushing it back up, right? And And then once Nas pushed up here, made a new high. You had lower highs here, a little too close for comfort. It retraced, and then here, once we made this higher low, before we made that final raid, look at Dow. Dow was a lower low, and then we had higher lows with now S&P and Nas. So that's showing you the strength of pushing up for the raid. Beautiful. We get that. Oh, what happens when we get up there? We have new highs. Oh, well, there's two divergences I should have drawn. There's this one too. Okay, so first, once we make this final raid up here, we have took the Asia high here, and then S&P did not take it, and neither did Dow. Okay, and then with that, you have also a lower high here, right? So literally a lower high with Dow, and then you have the higher highs here with S&P and NAS, and that pushed us down. The rest I'm not even going to get into, but for shits and giggles here, this extra sell, you had a lower high here with NAS, higher highs there. So how does this work for you, right? Dow, interesting here. It's really going to be a higher low to push straight up, or it's going to be sinking right through, or take its time. Now we're going back to the logic of me drawing this, for example, like where we pushed up on that V shape and then we come down, lower high, and then roll through. Dow is kind of doing it. Let's go back to it. You can see we got the V shape, right? We got an extra drive. You have to consider that as a possibility. And then it breaks down for a low and lower high, right? So is it doing that here where, it came down, lower high, and then roll over again, right? So in this case, it's pretty much just structuring all the way down, creating nice liquidity. So that's not helpful for us buying. For us selling, it's just a little too easy. But is that going to be the case where you pop up lower high and then roll over? That's what I was saying, because I still think, I just still feel like it's okay for the market to come down. It's like the end of the fucking world. I mean, for everything you got going on right now, how can it not? Anyways, I have to go. Fuck. So this was definitely pump, dump, sell, buy, sell. So when it's a pump and dump, it'll turn into a sell, buy, sell. So we get two pumps, right? So we get a pump first, and then another raid, and then it's a sell, buy, sell, right? So sell, buy, sell. Wow, sequence, right? Lower, low, lower, high, right? Sell one, sell two, sell three. There's your real sell threes. In this leg here, you had how many sells? 1, 2, 3, 4, right? This leg from here to here had how many sells? 1, 2, 3, 4. How many sells did this fucking leg have? 1, 2. Rare, right? Beautiful. But time is involved because of the PM session. All right, let me not veer off and finish this fireness. S&P, again, similar story. So they drived up, they made this lower high, they're building it here. It's just, if you're a bearish, that's what you want to see. I mean, look at that. Yeah, would you want to run that? Yeah, you want to run it. Are they going to do it right now? No, because they have to get the liquidity. They got to make it believable. And this is history in the making. I don't know what else I could tell you, but now we came a little lower, dipped in here. If we make a new high, I think we're bullish. I'm gonna just tell you that right now. If we make a new high out of any of these highs, I think we're bullish. All right? And if we're not, and if we don't, I think we're bearish. I'm gonna keep it fucking simple. That's just how I'm looking at it right now. With the conversation of why I made the video long yesterday about oil was also going up today. So that was going to be kind of a factor of us either coming down or not. And that's why the play I made was selling and going down as well. So you can see here, look at this, shakeout here. Fucking sloppy, down, up, down. Oh my goodness. Yeah, it worked out, right? Similar idea, just a little more sloppier, in my opinion. And then a little too high for my comfort right there. And then lower low, lower high, lower low, right? And popped up. So that's really that. I know I'm gonna forget something in this video, and then fucking not helpful at all. Just sit in the middle. So damn, am I missing something? So I think I said everything from yesterday. Okay, so take a look at today. Well, yesterday's candle closing back in, you had a higher chance of it reversing on this next day, which is today's Wednesday. Um, and I also said that the daily range, I'm sorry, the weekly range has already been printed. I said it's over 1,000 points. It's already printed. So like the expectations is of it going higher is also very difficult for me because for you to, I mean, I'm not saying you can't be a higher more than 1,000 points in the weekly range, but it's kind of like you've already done that. And these are equal highs that one day will, once we come down, we'll eventually want to come back up. So it made sense. We'll see, man. It's still, again, it's still fucking neutral, dude. Right back to fucking neutral. So, but we have order flow down. All right, when you make a low and pop up for a lower high, and then you make a new lower low on this the higher time frame, and you pop back up in, well, what do you expect? You expect it to eventually roll back up for a new low. So if we're gonna keep it that fucking simple, that's simple. All right, I'm not gonna make it any more harder than that. Again, according with what I said about overseas stuff and oil, right? That being said, here, I talked about this. This is the first imbalance of the year still. So I liked coming back in. You have liquidity, imbalance, and breakout level right there. All pretty much, I mean, if it was gonna slither really up, then I wouldn't even want to see that get taken. I want to see it get created. Initially, I want to see that type of pattern or narrative form. So imagine if you knew that once you broke through, this was creating the imbalance, and then we made a high, and it retraced. It's going to retrace and create the liquidity on the bottom to then make a new high. So that right there, like when we talk about me attacking that, you also can understand that it's going to form also. Anyways, I hope that is a little helpful. The daily range really small. So in a slithering day or a slithering price action, you wouldn't want to see this bearish. You'd want to see this bullish, and then it just kind of like this, on a daily type of thing. Like slither up here, slither up right there. Like it's trying to show you examples here. But anyway, I think it's just a swing. Another swing high here. Bodies, no more bodies here. There's a gap here. Getting weak. We're not really closing inside that bearish fourth imbalance. I gotta fucking go, bro. This is insane, man. I'm always fucking forgetting something, dude. Trapped in this projection here. Only offering a bullish candle here. That's why I wanted to see this candle push down and be strong. Bearish day. Maybe it'll just happen tomorrow. You guys take care. God bless. I don't know.